the anvil in China. But the big story tonight is that Angela Merkel and Nicolas Sarkozy met, and that meeting went on till a short while ago. In a press conference that is underway even as I speak, the two leaders have announced that France and Germany are committed to shoring up the euro. They have proposed a Eurozone Economic Council to be headed by EU's current president. The proposal includes that the president of that Economic Council have a term of 2.5 years. But more importantly, Merkel and Sarkozy have proposed that all EU countries adopt a golden rule to have balanced budgets, as well as to align corporate tax. Now, that's the thrust of the key announcements coming through from that big, high-powered meeting this evening. To get a better sense of what these announcements amount to and what they will mean for the Eurozone, do they provide any sort of lasting solution to the problems that the zone currently faces? Joining me, Standard Chartered Sarah HEWIN. Sarah, thank you very much for joining us this evening. It's always good to have you back on the show. You've just heard me outline some of the key proposals announced by Angela Merkel and Nicolas Sarkozy. What do you make of the most important one being the golden rule to have balanced budgets? I'm guessing this is the rule to impose national laws across all EU countries to ensure certain budget exercises or keeping within certain deficits.
Yes, I mean, this is something that Germany has adopted, Italy has adopted, France has been discussing for a while, and it's seen as a way of really making sure that we don't get into a situation in future where European euro area governments run up very large deficits. Now, the question is whether there's going to be agreement for this from national parliaments. Obviously, it constrains what national parliaments can do if there is a rule that budgets should be balanced. And we don't know the details yet. Are they talking about budgets being balanced through the cycle on average, or that there should always be a balanced budget? So there are lots of questions around this, but I think it suggests that there is a commitment from Germany and France to really try to manage this crisis in a new way.
Sarah, coming out as we are of 2 weeks of utter chaos on the financial markets across the world, the deep concerns that the globe has about the European sovereign debt situation, as well as the GDP data of recent past has shown up, the growth figures coming in from several important EU countries, including Germany's today. Do you think that this announcement really amounts to much from a meeting of two of the most important leaders in that zone?
Well, I think it is significant to a certain extent because it shows that there is commitment from the two major economies in the euro area. And any solution to the crisis is going to be dependent upon Germany, but also dependent upon Germany and France working very closely together. And this is what we've seen time and time again, meetings between Merkel and Sarkozy.
But Sarah, sorry to interrupt you, but what has this meeting yielded? Simply, I mean, any national law to limit deficits can only be prospective. It doesn't solve the problem that we're facing with either the peripherals, that's Greece, Portugal and Ireland, or even the risk of Spain and Italy joining that list, or the pressure we saw on France last week with the sell-off on its bank stock. So clearly all of these are prospective moves, but what about solutions to the immediate crisis?
I think the view for Merkel and Sarkozy is that the decisions that were taken in July need to be taken into account. So they've done what's required in order to shore up the euro area. We've seen the European Central Bank, of course, making bond purchases to lower the yields on the sovereign debt of Italy and Spain. And from the German and French position, once the EU bailout facility, the changes to that facility are ratified by national parliaments next month, then they've done what's required to stabilise the situation. Now, clearly that's not satisfactory to many in the markets. There had been expectations that today would see an announcement of the issue of a common euro area bond, but that really was never going to happen in my view. There's just not enough political support in Germany for that, so we're still some way off. So maybe it was the case that market expectations were too high high in the approach to this meeting, and that really what has come out is as much as could be expected given the constraints that both Merkel and Sarkozy have from their national parliaments.
All right, it's interesting you say that about Euro bonds, because word has it that several political opponents in Germany are now coming around to the view of supporting the Euro bond, but I'll come to that in just a bit. Amongst the announcements made after today's meeting, the two have also proposed a Eurozone Economic Council. I'm curious to know what you read into this. I know we're awaiting more details, but do you think this could be a harbinger of the fiscal union that the Eurozone has so dearly been lacking? Do you think that this could mean, eventually sort of a more coordinated fiscal policy across the several members of the EU?
There's certainly been moves in that direction. I think we have to ask the question, what's different now from what there has been previously? We've always had EU finance ministers meeting. We've previously had fiscal rules that were supposed to be met. The difference now seems to be that that Germany and France are putting more weight behind countries actually adhering to these rules. But in the past, of course, they've been the biggest offenders. So it's difficult to see what difference it's really going to make to have an economic council that meets. I suppose it formalises the process, but ultimately it comes down to countries towing the line and really abiding by the rules. That's always been the problem in the past. Not that the rules weren't there, it's just that countries, including France and Germany, ignored them.
All right, I understand the previous point you made about political opposition to a Euro bond. In your assessment, though, how important a solution could the launch of a Euro bond be to the current problems that we are facing across the zone, whether it is Italy and Spain or whether it was even the issues we had with Greece and Portugal?
Well, it certainly could be quite a nice solution to the problems. What we're facing at the moment in the euro area is one country, Greece, which probably has solvency problems. So there's still questions over whether their debt needs to be restructured and ultimately restructured again. For the other countries in the euro area, it's down to liquidity. So anything that can keep the cost of borrowing low is going to be positive. Now, that's been achieved over the recent week by the ECB making purchases of debt for Italy and Spain. A common euro area bond would lower borrowing costs for all countries in the euro area and would deal with these liquidity problems. However, having said that, I don't think that there's enough political consensus yet in Germany and across the euro area for it to really take off in any big way.
Okay, one final question, Sarah. We've got 30 seconds to go. What would you have liked to hear from this meeting today, given the political constraints, given the kind of sell-off we've seen in the last 2 weeks, given the nervousness across global markets? Some realistic targets that they could have set in this meeting, some realistic announcements that they could have made this meeting that would calm the nerves of an otherwise jittery market?
Well, I think it's very difficult to really say what they could have done given the constraints that they face any more than they have already announced today. As I say, the market was anticipating that there would be an announcement on a common euro area bond. That would have been a really big deal. But in the absence of that, I think that the most that they could have done is what they've done, announced harmonisation. And that's something that we should take into account. It's not insignificant. But really, market expectations perhaps